Hello viewers, welcome to my session on trading account under final accounts. Now to begin with, final accounts or financial statements of company include trading account, profit and loss account and balance sheet along with cash flow statements. Any business enterprise needs to prepare a trading and profit and loss account first before moving on to the balance sheet. Now, trading and profit and loss account, the meaning is trading account is the first part of the final accounts and profit and loss account is the second part of final accounts of financial statements. Now, why trading account is prepared by the business enterprises, or what are the uses of trading and profit and loss account? Now, it is trading account that helps the business firm to identify what is the gross profit on a particular day, and it is profit and loss account that helps to identify what is the gross net profit or net loss of the business enterprise. Now, the motive of preparing the trading and profit and loss account is to determine the revenue earned or the losses incurred during the accounting period. Now, to define what a trading account is, it is used to determine the gross profit or gross loss of a business which results from trading or manufacturing activities. That is why it is called as trading account. Now, trading account includes all the manufacturing expenses of a firm. So, when raw materials are being converted as the finished products in the factory, many expenses will be incurred to manufacture the product. All the manufacturing expenses are coming under trading account. Now, the gross profit, which is the net result of the trading account, is the indicator of the performance of the business. Now the formula for calculating the gross profit is that net sales minus cost of goods sold, where net sales includes gross sales of the business minus any sales returns, also discounts and allowances. Now what is the nature of trading account? It considers only the direct expenses and direct revenues while calculating gross profit. Trading account is prepared to understand the profit earned by the business on the purchase or manufacture of goods. Now, what are the items that appear on the debit side of the trading account? There are four important items that will appear in the trading account in almost all the trading account. To begin with, we'll start the problem by identifying what is the opening stock. Opening stock will appear on the debit side of the trading account, followed by purchases. Immediately after purchases, we have to locate if there is any purchase returns. In case if you are not satisfied with the materials purchased item may be sent back to the supplier for want of replacement. So that purchase returns is to be included in the trading account, that is actually subtracted from the purchases. So purchase less purchase returns. And any other direct expenditure that is incurred for manufacturing the product will appear on the debit side of the trading account. And on the credit side, we have sales. Same way like purchase returns, we have to find out if there is any sales returns. The customers who have purchased materials from us may return the goods if they are not satisfied. So in that case, we have to find out if there is any sales returns, and sales minus sales return will appear on the credit side. That is the first item normally. And we will try to close the trading account with the closing stock. So these four items are compulsorily will find in any trading account. Now this is a typical format of a trading account where we have both sides. The first side is called as debit side and the second side is called as the credit side. Now on the debit side, we start the problem with opening stock as I said, then purchases less returns. And on the credit side, it is always sales less returns will be the first item, followed by closing stock. And immediately after the purchase returns, we will be adding all the direct expenses. What we mean by direct expenses? They are factory expenses or manufacturing expenses. Any expenditure incurred in the factory for manufacturing a product is called as direct expenses. And the list are carriage inward, freight, octroi, dock dues, excise duty, royalty, motive power, coal, gas, water, factory expenses, etc. Now, once we have completed entering the debit side and the credit side of the trading account, we have to put the total on both the sides. So that is called as closing the trading account. While closing the trading account, we have to find out which side of the account is having the higher balance, either the debit side or the credit side. So the higher total will be put on both the sides. Say for example, if less sales return and closing stock is higher, then we have to put the same total on both the sides, debit and credit. Then we have to find out what is the balance between the opening stock purchases plus the direct expenses compared to this other side, credit side. Now the balancing figure is called as gross profit. If the reverse happens, if the debit side is having more total than the credit side, then the ultimate result of the business will be gross loss. So in that way, trading account is helping us to find out the gross profit and either gross profit or the gross loss. Now this gross profit will be transferred on the other side, on the credit side, while preparing the profit and loss account. That is the second step in preparing the final accounts. Now there are a few more items that will appear on the debit side of the trading account, which this format is very precise, and I have given the next slide, which includes some more items that appear on the debit side of the trading account. Now let us discuss that also. Now here the items appear on the debit side of the trading account further includes elaborate slide. This is transportation cost that is incurred for bringing the raw material inside the factory or the manufacturing place from the supplier's place is called by any one of the name which is mentioned here. It can be called as carriage, cartage, freight charges, carriage inwards, railway charges, etc. All these means the same, transportation cost which is incurred inwards. And there are also charges like dock charges, clearing charges, landing and wharf charges. These are all incurred if the materials are being unloaded in the port. So something paid to the authorities for clearing the materials are called as dock charges, clearing, landing and wharf phase charges. Now, other than that, we also have duties, various duties like octroi duty, import duty, customs duty, excise duty, and wages, manufacturing expenses, factory expenses like rent, rates, insurance will also appear on the debit side, and anything connected to the raw materials like cotton waste, jute, oil seeds, stores, spares or spare parts that are consumed for manufacturing will also appear on the debit side. And we have coal, gas, water, fuel, power, motive power, heat, lighting, electricity, etc., which are used in the factory for manufacturing the product. All these items will appear on the debit side of the trading account. Thank you for watching. The session will be continued next in the profit and loss account, followed by problems in the trading and profit and loss account and the balance sheet.